Hey guys, UC here from iTradePrices. It is May 18th, 2023. And in this video, I wanted to talk about the, let me open the website, the TOS breakout indicator, right? So it's an enhanced version of the TTM Squeeze indicator, okay? Not going to go into the detail of what the TTM Squeeze indicator is. You can read all about that about it online, right? But it is available on the Ameritrade ThinkorSwim-platform by default. So if you go to studies, click on edit, and if you type TTM, this is the indicator that shows up. Double click and just apply it, and here it is with the default settings, right? This one. So basically what it tells you is that when the histograms are above the zero line, right? This is the zero line right here. When the histograms are above the zero line and the dots here turn into green, right? That means that the squeeze is happening and the prices are likely to move towards the upside, right? And when the histogram is red and the price and it's below zero, that generally means the prices are moving down, okay? And when the prices are moving from this stretched level back towards zero, that also indicates that the downside pressure is dying down and the prices are likely to move back up, right? So that's the indicator, okay? So what I've done is it's generally a breakout indicator because of course you can use it as per your liking, that if you want to use, but the way I have enhanced it is that what I've done is I've taken all this information, and instead of looking at the indicator and trying to figure out what's happening, you can actually see it right on the candlesticks itself, on the chart itself, right? So when the prices are moving down, right, it becomes red, and when the prices are moving up, it becomes green, right? So and when the bars are gray, right, that means it's sideways for most of the time. Of course, you can see that it's not sideways here, it's coming down, but that depends on the sensitivity of the indicator, right? So the way I like to use this indicator, actually, let's get into the ThinkorSwim platform and try to pull it up, and I'll show you how exactly it works, right? So here is the enhanced version. We're going to get rid of the original one, apply, right? So here is the chart of E-mini NASDAQ futures contract. It is a 1000 tick chart, right? It's not a time chart, it's a tick chart, right? So if you look at it, so for example right here, right, this was gray, so the first bar turned green right here, so that's a signal that the prices are moving up. So if you were to get long right here, right, again, it depends on your stop loss, your profit target, all that stuff, but the price moved up from that point onwards, right? This was a little bit of gray right here, and from here it showed you a red bar, right? So that means the prices are likely to move down, right? So depending on your stop loss, if you had taken a position, you might have gotten stopped out or not, right? It moved up around maybe 10-12 points right here, and then it dropped nicely, probably around 50 points, right? Here's a gray area, and then it turned green right here, and then it went back up as well, right? So I'll keep on moving towards the right, and you can see, so basically all that TTM squeeze indicator information is not on there, but actually on the chart itself, on the candlesticks itself, right? I like to trade this on the futures contract because I like to scalp, and tick chart probably depicts a little bit better version when it comes to scalping for this kind of trading. But if you can definitely look into other time-based charts as well, right? It might not be accurate, or it might not be that good. You might have to play around with it a little bit to see what the perfect settings are for you, given your risk profile and all that. But let's pull out Tesla, for example, right? Let's pull out maybe, I don't know, maybe a 1 minute chart, okay? And let me zoom out. Let's go back. Let's go right here. This is probably not today. Let's there you go. Okay, so here the 1 minute chart, right? So let's say when the market opened, what happened, right? So 1 minute chart fired a green bar right here at the open. open is not really a good time to kind of get into a trade because of the wacky movement. But let's say you take a trade after the first gray, right? You let the market settle, do whatever it wants to do, and then you'll see what's happening, the first gray, and then you got a red signal, right? So if you shorted there, that's about $1.50, right? This is a green. So from there, the price moved back up. So one thing that I have done, or I think can benefit, is that if you drop some sort of exponential moving average, so let's say, for example, you get back to NQ, let's get back into 1000 tick chart. Let's add some sort of exponential moving average, right? So let's say you got a 50 EMA, right? You apply it. So now you say that as long as the price is above the 50 EMA and I get a green bar, that's a buy signal for me. And when the price drops below 50 EMA and I get a red bar, that's a sell signal for me, right? So let's say you start at 10 o'clock, right? You ignore the first 30 minutes, right? So probably this was your first signal. This probably would have stopped you out. This one went nice, right? About 10, 12 points, not bad, depending on your stop loss, all that stuff. It kept going back up. So if your stop loss was the low of your entry bar, it did not get hit, right? So that was not bad. This one right here fired another signal, went up nicely, actually all the way up as well. This one you would have ignored because the price was above the EMA, so you would not have taken this short, right? So you would have missed this one, right? But that's some sort of a discipline that you need to introduce, or if you want some sort of help by overlaying an EMA on your chart, right? Definitely you would have taken this one, you would have ignored this one, right? So that's where you got saved because the price was above EMA. This one right here, nicely, this one was below the EMA right here, so you would have taken this short and it gave you a little bit of nice move to the downside, right? So on and so forth. So I call it a breakout indicator because, you know, you're kind of trying to catch the breakout of some sort in this. It's not a pullback kind of a trade, right? You're catching the price as it is breaking out, right? It's not a pullback strategy where you're trying to short it on the way back, on the way up, or on strength, or you're trying to buy it on the pullback or on the weakness, right? It's a breakout trade by nature. So definitely in a trending market, it looks nice. It gives you good entry points. Let's see if we can find some sort of sideways price action, something like that, right? This one right here. So this one would have been okay. This one right here, yeah, went sideways. Sure, depending on your stop loss, it would have stopped you out or not. But really good scalping opportunities, I think it can give you, right? So this was all sort of chopped, so that's why you would have avoided that, because it was gray. So you can change all the parameters of this indicator in the settings and, you know, figure out what sensitivity you like. But yeah, so this is what the indicator is, and it's an enhanced version of the TTM Squeeze, right? So it's not something out of this world, but it's just a improvised version of the TTM Squeeze, because I don't like looking at the indicator and then figuring out what's happening on the chart. I like everything on the chart, price chart itself, right? And this is what it it gives me, everything on the chart itself, so I don't have to look elsewhere. All right, hope you guys like this little video, and if you have any questions, comments, please let me know. All right, thank you, take care.